Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers. It's Wednesday, November 19th, 2025, and we've got a fresh batch of insights for you, based on all the market chatter and data we crunched yesterday.
That's right, Ethan. Our AI dug deep into quite a few discussions yesterday, flagging a good mix of stocks. We saw some genuinely promising signals, especially from the larger players, but also some pretty loud warning bells, for companies facing significant headwinds. Overall market sentiment feels nuanced today.
Nuanced is a good word, Brooke. A little bit of everything in the mix. All right, let's dive right in with Poet Technologies, POET. Now, the community sentiment for Poet is, well, cautiously bullish. People are really excited about their co-packaged optics technology, seeing it as the future. Some users are even talking about it being an easy 10x for the long haul, especially now that they're reportedly flush with cash and starting to ship production orders. That's a huge step towards revenue, don't you think?
Well, Ethan, while the future sounds bright, my KPIs are flashing a few warnings. We've talked about Poet before, and it's mostly been a stay away or speculative gamble in our past ratings. The current data shows a troubling debt-to-equity ratio of almost 15. That's a lot of debt, even if they're flush with cash right now. And let's not forget, they're still unprofitable, with a net profit margin of 0 and negative EPS. Plus, a price-to-book ratio of nearly 16 suggests the market is already pricing in a lot of future growth that hasn't materialized yet.
But Brooke, the news about shipping production orders is a real game changer. That's revenue on the horizon, which could absolutely improve those profit margins and EPS down the line. That's why people are excited, looking at the long-term picture.
I get the excitement for the long term, but for now, those are future hopes, not current financial realities. The extreme debt and lack of profitability make it a very high-risk play. The previous stay-away rating, frankly, holds true. My verdict for Poet today is to stay away.
All right, moving on to Meta Platforms, META. Now, despite a post mentioning recent losses, the overall community sentiment is strongly bullish. Users are saying Meta makes boatloads of money even with significant AI spend, calling it a long-term play that will recover and go higher. And, they just scored a massive antitrust victory against the FTC. That removes a huge cloud over their growth potential. This looks like a solid buy to me and an upgrade from some of our recent cautious buy or stay away tags.
I actually agree with a lot of the bullish sentiment here, Ethan. The KPIs are incredibly strong. We're looking at robust revenue growth of over 26%, a net profit margin of almost 31%, and an EPS of $22.59. Their return on equity is fantastic at over 32%. Yes, the stock dipped recently, about 18% in a month, which explains the losses some users mentioned, but those core financial metrics are rock solid. The antitrust victory de-risks their future growth tremendously. This stock has consistently been a buy in our history, and for good reason. My verdict for Meta today is a strong buy.
All right, now to Reddit, RDDT. The community is buzzing with bullish sentiment, talking about a blowout Q3 earnings with 70% year-over-year revenue growth. People are calling it a money printing machine and highlighting its value as a top AI training data source, even hinting at a major licensing deal with Google. Users are saying it's a good bet mid-long term and is relatively safe. That sounds like a rocket ready for launch.
Hold on to your hats, Ethan, because my data is telling a different story here. Despite the user enthusiasm, the PE ratio for RDD is an eye-watering 85.57. That's an extremely high valuation, implying a huge amount of future growth is already priced in. And while you're talking about rockets, let's remember the stock is still 35% off its 52-week high, which indicates significant volatility. What really raises a red flag for me is that Cathie Wood, a prominent growth investor, ditched Reddit for a crypto stock. That's a pretty strong institutional signal that, despite the growth, the valuation might be unsustainable. We've often rated RDD a stay away or speculative gamble. But with those growth numbers and the AI data potential, surely there's more upside? It's a newer public company. Potential? Yes, but at what risk? The current price leaves very little room for error. Any missed expectations and that high PE could come crashing down. My verdict for RDD is to stay away for now.
Let's tackle MicroStrategy, MCR. We've seen a lot of chatter around MCR. While some users are expressing outright bearishness, calling it a Ponzi or a highly leveraged Bitcoin proxy, I also saw some strong voices believing we're at a bottom signal, predicting it will moon with the next Bitcoin leg up. Michael Saylor, the CEO, remains undeterred by critics. So, while there's certainly caution, there's also a dedicated group seeing huge upside, believing it can pop harder and faster than anything.
Ethan, the overwhelming sentiment across multiple posts is deeply bearish, and the KPIs absolutely reinforce that. MSTR is currently trading very close to its 52-week low and is significantly down from its 52-week high. Its beta is an alarming 3.374, meaning it's incredibly volatile. Those pops also mean massive drops. And the debt-to-equity ratio is a staggering 14.147. News reports are even highlighting concerns about their convertible bonds becoming an issue. This company is essentially a highly leveraged bet on Bitcoin. While a huge Bitcoin rally could temporarily improve things, the fundamental financial risk is just too immense. We've consistently rated MSTR as a stay away or speculative gamble.
So the Saylor strategy isn't enough to sway you?
Not when the company's financial structure is so precarious. That level of debt and volatility makes it extremely risky. My verdict for MSTR, again, is to stay away.
Finally, let's talk about Home Depot, HD. Now, this one is tough. The reports are saying HD fell pre-market after cutting its full-year outlook. Users are seeing it as a warning sign for the economy at large, with consumers putting off projects because of high costs and interest rates. It's never been rated before on our show.
And for good reason, Ethan. The sentiment is overwhelmingly bearish, pointing to a broader economic slowdown. HD's EPS missed forecasts, and they cut their full-year outlook by 5%. Revenue growth is a dismal 0.049. The stock is currently trading very close to its 52-week low. But the most alarming KPI for me is their debt-to-equity ratio, a staggering 580.591. That level of debt, coupled with shrinking demand and a bleak outlook, puts Home Depot in a very vulnerable position, especially in a high interest rate environment.
Well, HD has historically been such a stable, dividend-paying company. Surely this is a temporary dip, and it could be a long-term value play once the economy recovers.
Perhaps eventually, but eventually doesn't help with current risk. The immediate outlook is poor, and that astronomical debt-to-equity ratio makes it a significant risk right now. The news about the entire home improvement sector recovery being delayed reinforces this. My verdict for HD, again, is to stay away.
Well, that was a packed session, Brooke. Let's wrap up our daily hunt for today with our compiled list. Investigate as buy. Meta platforms, Meta. Investigate as cautious buy. None. Investigate as speculative gamble. Reddit Inc., RDD.
Just a reminder to all our listeners, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions.
That's right. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in to The Daily Hunt for Multibaggers.
We'll catch you tomorrow with more insights. Happy hunting!